In a single month, one crypto narrative exploded more than tenfold, from about $1 billion in volume to 11 billion. Wall Street's assets are moving onto crypto rails and fast. Now, real-world assets is a big tent, and tokenized treasuries and gold are actually far bigger by size. But most of that just sits parked, quietly earning yield, barely trading. The thing people are actually trading, the volume that just went vertical, is stocks. So, is this the merger of Wall Street and crypto finally becoming the biggest story of 2026, or is something stranger going on underneath? Quick note, none of this is financial advice, just a breakdown of what the on-chain data is actually showing. First, the boom is real. For most of this year, tokenized stock volume sat flat, $1 billion or so a month, mostly ignored. Then, in July, it went vertical, roughly 11 billion in a single month, driven by a wave of new issuers and by Robinhood launching its own blockchain on July 1st, built to trade tokenized stocks around the clock. On paper, this is the dream, traditional finance and crypto colliding on the same rails. But look at what people are actually trading on those rails. Early on-chain data shows the single biggest category of real-world asset volume wasn't stock trading or bonds or treasuries. It was meme coin stock pairs. On one day in late July, they made up over 70% of the volume, while real stock trading was a fraction of it. People aren't tokenizing their retirement portfolios. They're using tokenized stocks as one more thing to gamble against meme coins. And it got genuinely absurd. A launchpad called long.xyz pioneered stock-paired pools. You pair a meme coin with a tokenized stock, so every trade of the meme routes through the real equity underneath. Its flagship token? Artificial Inu, ticker AI, a literal dog coin paired with Nvidia. And at one point, that single dog coin made up around 60% of all the volume on Robinhood's entire blockchain, and roughly 80% of all tokenized Nvidia trading. A dog. It drew in so much attention that the founder of Uniswap, Robinhood's own head of product and Robinhood CEO Vlad Tenev weighed in. Over on BNB chain, a coin called Mars Coin paired with the stock SPCX, even paying holders dividends funded by a trading tax, and ripped from $4 to $14 million in a single hour. And on Solana, a launchpad called stonks.xyz is running the same game. Its token spiked over 100-fold in a week. But here's what keeps this from being pure noise. Underneath the frenzy, something structural is happening. On-chain data shows more than half of all tokenized stock trading now happens outside normal US market hours and on weekends, when Wall Street is fully shut. Over 90% of it runs through crypto venues. Tokenized stocks are quietly becoming a true 24/7 market, something the traditional system has never offered. So it's not all memes. The casino and the real thing are built at the exact same time, which is the question that actually matters. Is this the early, messy beginning of Wall Street genuinely moving on-chain, or is real-world assets just the last costume for the same speculation crypto always produces? Because at the start, those two futures look identical, and only one of them lasts. As one analyst put it, all roads lead to meme coins. Give traders shiny new rails, and speculation always shows up first. To be fair, almost every real technology started out looking like a toy. The early internet was chat rooms and games before it was commerce. Speculation is often just how new financial rails pull in their first users. So the first meme coin frenzy isn't proof this is fake, it might simply be how it begins. So, is RWA plus crypto the biggest story of 2026? The volume says something real is happening. The breakdown says most of it is still speculation. Both are true at once, and that tension is exactly what makes this worth watching, not writing off.